Good evening, everyone. On behalf of Kirin Advisors, I welcome you all to the virtual H2 Financial Year 25 earnings on call of Shree OSFM E-Mobility Limited. From management team, we have Mr. R.C. Patil, Managing Director, Mr. Nitin Shanbag, Chairman and Whole-Time Director, and other management members. Now I hand over call to Mr. Nitin Shanbag for opening remarks. Over to you, sir. Thank you.
Thank you. Thank you very much. And thank you for joining us on a weekday afternoon call. I know all of you are busy, but we are proud to share our results. We have had a fairly decent, year. We have been able to, and I'm sure everybody has their financials Power Pack team, which will give you insight as to how we are moving over the next couple of years. As all of you know that it's been a year and a half in our journey in the stock market as a listed company. We, a 23-year-old company, a company which has been managing employee transportation for the last 23 years. This 1.5 year in the stock market in the public limited space was also a good learning. But our DNA and our insight is what we transfer to the market, to our stakeholders, where the key for us always has been clients, followed by employees, followed by stakeholders. So thank you all for being with us, all of those who have been with us since the start of the journey. And we hope that you'll continue to be with us and share our growth story.
Thank you, Nitin, sir.
Yeah. Now I would like to introduce you with my team. All of you know Mr. R.C. Patil, the Managing Director, who's been giving us the direction as to how to grow this company, run this company. He brings in, both of us bring in about 23 years of experience. And this year and the year ahead, he's given us a great direction for this company. So he'll be there to answer your queries. Second most important addition to the organization is Mr. Suraj. Our CFO, Mr. Shiva. Our finance head, Mr. Kiran. Our Pan India operations head, Mr. S.K. Singh. And our CS, Mr. Vikas Jain. The reason of this Power Pack thing is our commitment towards you as a stakeholders, our commitment towards our clients, and our commitments towards this business. Now I'll hand over. I understand we will take the Q&A sessions a little later after we do the introductions. I've already introduced where we are, what we are going to do, and for that I would like to give it to Suraj now, he'll introduce himself, he'll give you a brief background about where he's coming in from and what his plans are for this company in the next 2 years. He brings in young talent, young energy, and a super of different multiple industries. So I'll hand it over to Suraj.
So yeah, hi everyone on the call. I'm Suraj and I come from a very typical startup kind of backgrounds. I would say most of the startups that you know about, I have been part of them. I come from a background of companies like Zomato, have worked very closely with the team of Swiggy, Dineout, etc. And was a very close, kind of a team member from the initial stages of Dunzo as well. And come with an experience of close to 14 to 15 odd years of scaling businesses from 0 to 1 and taking them from 1 to 10x as well, right? So when I was solving the different problems on the journey, I met Mr. Nitin, and Mr. Nitin and I was having a conversation that how can we, work together My only question to sir was that you have been building this for almost 22 years. There's a great work that you have done, but what next do you want to do, and why would you need a guy like me coming from a completely different, kind of a school of thought? So this is what exactly he said to me, that this is what he wanted, that he also wants to grow the business at a large, kind of a speed way, and also bring in the kind of new technology, the ideologies in the market, and what the next set of years going to be for OSFM, right? So the one thing he was very clear to me was that he still believes in the sustainable growth, and where the word sustainable is what he stresses more, and that is what he wants to build in with a fast growth kind of a company. Now coming to the point where we are going to have the business development, this is the vertical that I'm going to head here. And what I will be now bringing in, so employee transportation is the core of our business. It's the main skeleton that we are going to build in. What we are also going to do is that we are going to have our teams who are now aggressively going to take care of the two most significant part here. One team will be taking care of holding the fort and expanding the current business of what you have seen is almost 140 crores of business that we have. We are going to very aggressively going to work very closely with our current set of the clients we have to grow that business, and at the same time we are going to have people in all the metro cities to aggressively chase the next set of corporates who are there. So the entire gambit is going to be a combination of business development and key account management. So that is where we are coming in, and we are committing a number of 175 crores for the year 25-26. This is what we are looking at. I'm sure there might be questions of being the conservative number, but we as in a company would want to be the under delivery to over commitment as a mode, and we are quite kind of confident that this number is only going to be on the higher side depending on the kind of teams we are coming in with, the kind of contracts we are in discussion already, and the overall development in the market, like new airports coming in, which are like very large businesses for us, and the new corporate expansion, work from home again coming back, the work from home reducing, and companies going back to the fact that more and more employees need to start now working from the offices. So all these factors are going to help us in the employee transportation business for us to take it to 175 number in the year. The second, the growth can be something, one is the current business and what the new business we are going to bring in. Now there is another growth which I would want to introduce, would be where we do not get into reinventing this cycle again. So as you would know, we are concentrated on particular markets. Every company has their own strong areas. Like we are quite kind of strong in the Western markets. We would also want to strategically have a presence in other metro cities coming in. So for that, what we also are in discussion with other ETS players who are, solving it through products, solving it through asset light models, some other asset heavy model. We are in discussion with a lot of companies today who also coming, close to the ethos that we bring in the company, who are running these businesses, how OSFM has done over the period, who are creating value for their the corporates, and at the end of the day, the stakeholders as well. So we are discussing with them as well to have a strategic acquisition, or you can call it a partnership, where we can also scale the business in a very quick time and have good contracts and companies coming into our gambit in a smaller set. Further details around that and giving you some good news around that will be something that we'll do it in the coming quarter. I can give you specifics about that, but right now we are selecting some companies whom we can strategically work with, and that will also add to the growth that we are talking about in 25, 26 and further to 27. That is what my growth strategy for the current business of employee transportation, our current business, and what the next year and the year after that is going to come in with. With this thing, I would also want to introduce that we are now looking at mobility as a universal market and not just talking about employee transportation. In the last 22 to 25 years, what the team has built here is that we have understood how the mobility and taking people from a point A to point B exactly works. We have understood the in-depth of how do you work with a driver and what is the psychology or the psyche behind the entire experience of a driver works. So we have understood that over the years, and we also know how do you manage assets and how do you basically take care of the, all these vehicles from point A to point A, and how do we basically run them for years. We are one of those very few companies in the market who have so much of experience coming in. So now the question is very simple. Why do we want to limit ourselves and our experience to only employee transportation, which itself is $1 billion industry? We understand that, but there are multi more $1 billion industries around the same mobility available in the market, and which is actually requires operations kind of the kind of operations OSFM brings in. We want that to happen. So I would want to introduce two strategic partnerships that we are in discussion, and we are in the final stages of going ahead and starting them with. The first partnership is going to be with Uber, who is the ride-hailing giant in the world market and also in the Indian market today. We will be coming in and associating with them, where we will be bringing in our assets, and we will be having the drivers who will be working for us, and we will be becoming to look as significant partner in the ride-hailing market in India, in all the metro cities. And we are looking at strategically having, because we also want to understand and test the waters, and we would be very, very calculative and strategic. So that's why we are going to have the pilot immediately starting in the coming days. And from there, what we are potentially looking at is a very large partnership with Uber. Uber, as you would know, is running close to 4 lakh vehicles in the Indian market today, where if you look at the fleets are contributing a very small amount, 10 to 12% of fleets are the ones who are managing these. The rest, it's all directly drivers buying their own vehicle or renting it from somebody and basically being available on the Uber platform. But what the direct and individual coming in the vehicle and registering themselves to Uber is a big question mark for the end experience they're selling in the market. And that is a significant problem Uber is trying to solve. And they want to promote very clearly that they want to have a larger share of these vehicles who are running on the platform to be coming with strategic fleet owners. We already know a few of the larger names who are there in the market, but that is not enough. This market is growing every day multifolds, and they need strategic people to come in. One of the main reasons for them to approach us and tell us that, there was very simply that we are a 25-year-old company. We have been now listed as well, and we are showing some serious numbers in the market. And Uber coming to us and asking us to do this gives us a very clear message that people are looking at OSFM as a brand, and they are looking at us as someone who can solve the mobility problems in the B2C segment as well. So this is what we are bringing in the Uber partnership. Like I said, we will be sharing further details about the pilots and the exact numbers in the coming days. And this is going to be one of the most focus areas for the coming year for us, the Uber partnership. Right? Coming to my second announcement of the partnership, in the B2C market, we have already done the small car segment with ETS and the Uber partnership. We are talking about the cars. Now coming to one of the biggest markets and another $1 billion market that I would want to enter with OSFM would be the buses market. The intercity bus market in India is a huge market. And we have recently seen one of the giants in the world, which is Flix Buses, who has entered the Indian market as well, almost close to 1.5 to 2 years back. And they're already running close to 250 to 300 buses in different metros to strategic locations. Those trips are already happening. Flixbus, for the people who do not know, it's a European company. They are present in 44 countries. They are running asset-light bus models. Not just buses, they have gone and so closely working in the European market with the governments and all that today most of the B2C people carrying traveling businesses now getting outsourced to Flix. So they have even gone ahead, and now today they have 10 exclusive trains running in the European market, which are completely run by Flix. So we can understand where this entire transport market, and which is going to bring the change in the Indian market as well, that we see governments now passing on these kind of everything. Privatization is happening. We can see ride hailing now, giants entering into this market, and then we see Flix coming in, and they will be launching these partnerships with the government, and we will see all these things happening. So our second announcement is a very strategic partnership with Flix Buses, where we will be coming in with our strategic buses in the market to run the intercity services as well. Flix has a very solid model to run these kind of businesses, and they've been doing this. They have close to almost 6,000 plus buses running across the market, and they're already running 300 odd buses in the Indian market. And now they are counting on OSFM to be one of the very strategic players to come in and expand this business. Like Uber, we will be very strategic in launching this business as well. We will be strategically looking at pilots of a particular number to launch this business. Again, use our 22 years of operations experience of knowing mobility, knowing how to transport people, knowing how to manage the blue collar of the market. And we will use all our expertise to make both these businesses take to the next level. So in overall, just to sum it up, we are talking about employee transportation reaching around 175 crores of market in the coming year by end. I would want to say this is a conservative number from my end. We will be aiming at much better figures coming in. And then coming in, how we have strategic partnerships on acquiring strategic players in the employee transportation business to get into different territories and to have strategic clients to be onboarded at a limited time with a good value, of course, on paper. Then the most like the two main introductions of the new generation or the new era announcement for OSFM would be that we are not going to be just a B2B player, but we are going to be one of the strongest B2C players as well in the coming years. And that is where we are going to go in. And both those initiatives of Uber and Flix will be asset heavy businesses. That is again new territory for us. But what this brings in here is that it will also call in for the utilization of funds that we will be discussing in the further discussions, and that is how we are going to use it, and that's how we are going to have a very steady presence in the market. So I would want to conclude on that, and then we can take up further questions.
Yeah, now I would like to hand over to Shiva sir, who's the CFO. If you want an explanation. So I think the panel is saying our team is confident enough, so we are open for questions now on what we have introduced and what the vision that we've shared on our journey.
Okay, thank you, Nitin sir. So we have first question from Mr. Shikhar. Mr. Shikhar, you can unmute and ask the question.
Good afternoon, Shikhar sir.
Good afternoon, Nitin sir. Good afternoon, team. So just want to understand this Uber model further. How will the economics work of this business model?
So Shikhar sir, Uber model typically works is basically depends on the trips what the driver is going to do. Our business is going to depend on that. We are going to have these vehicles which will be owned by us, and we will be having drivers who will be working on basically on a salary or a fixed wage kind of a model. We will be continuously monitoring them for making sure that there is a 12 to 14 hours of login, and there is a typical EPH like an earnings per hour, earnings per trip kind of a huge data that we have from Uber, that in an hour or in a minute or in a day, what is the potential that the driver can earn. Based on that, we have a trip level agreement with Uber, and Uber will obviously also give us a variable for the fleet management and cover a lot of costs that we're talking about. I can get into nitty-gritties and share those data later. And based on that, we will be basically working, and there is a particular margin we are looking at. We are looking at somewhere close to at a gross level, somewhere like 6 to 7% kind of a market margin is what we are looking at.
It's a scalable business.
Okay.
It's a multiplier effect. Okay, and in the introduction, as Suraj mentioned, they have selected us because all of us at some point of time are also a ride-hailing user, and we have seen the quality drop, right, Shikhar sir?
Yeah.
Correct.
Yeah.
So, international brands are waking up to the fact that though we are India is a very large market, but it is also to a certain extent quality conscious market.
Okay.
But you see, I mean, in the social media era, it is very easy to make it public.
Right.
So from that perspective, they have selected us and they are going to offer us multiple things for us to get stronger by the day.
Yeah.
Because their data shows that the fleet operators have the capability to maintain quality and discipline, for which there will be a premium. But since it is going to be a pilot project, we are a little conservative on the estimates.
Yeah.
But the numbers that they expect from us is phenomenal.
Okay.
Yeah.
Because I
So,
just wanted to add, like, in today, why Uber is, behind fleets and specifically with us also and having a lot of discussions. Close to just 10% of the fleet is today doing close to 30% of the business, right?
right.
So there is a very significant value that even though there is a large number of vehicles getting registered on Uber today as a concept, but the service qualities and the SLAs and the entire experience is going for a toss. So you can obviously expect, like you already know few companies where Uber has come in and spent a lot of money to scale that businesses. We are also looking at, so right now it will be too early to judge and the kind of the numbers we will be there. So once we do the pilots and everything, so this is going to be a very large kind of a partnership.
But the best part about this entire initiative is that Uber has judged us as a partner who's capable of delivering the quality and for which they are ready to pay the necessary premiums after we show our interest and our ability to reach those levels.
Right. Right. And for the pilot project, how many cars we will be using in this?
So, Shikhar sir, we would want to, the pilot cannot be something very low in number also because as you know, it is more of a margins of scale here. So
Right.
we are looking at starting this somewhere close to 100 vehicles to 200, somewhere like that. A final figure is something that we'll just work that thing out. But yes, somewhere around that would be the pilot kind of a number to even come to a conclusion that, where this journey is going to go. So we need
And
at
and,
least that.
and what are the expected timelines for the same? When do we start this pilot project?
They wanted it to start as of yesterday.
We are behind on timelines because Shikhar sir, you would know I'm also fighting battles that we are looking at
Actually,
sustainability.
Shikhar Saab is fighting battles with us because we come with a little conservative mindset. But
Right.
I told him that we have strong investors like Shikhar Saab and others, who will give us a green signal. Shikhar Saab, you've been probably knowing us for the last 1.5 years.
Right. Right.
Our DNA of conservativeness will lead, that's why we have personally asked Suraj to take the lead and lead us into the future of transportation.
Right.
Yeah. So this is our succession plan, and this is going to be, if you have monitoring the speech that the discussion that we had,
Right.
our fundamental for him is sustainability, and for him is growth. So we're
Right.
going to put these things together. Yeah. Sustainable growth on a aggressive mode.
So, Shikhar sir, just to add in this thing, I am a born Malayali who was raised in Uttar Pradesh, Lucknow.
Right.
And I have, traveled across, studied in Jaipur, Patna, everywhere north. I married a woman from Chennai and I've been in Bangalore for the last 15 years, right?
Okay.
So I'm literally the pan India, the kind of person and, almost sare ghat ka piya hua hai. So
Right.
that was my arrangement with Nitinji also that we have to make this business somewhere really big. Yeah.
That's very nice. Very nice to hear. So similarly, coming to the buses point, so how will the economics look of this flexi buses?
So very early right now to mention.
Okay.
So 7 to 8% is what I'm getting in from the team here, Shikhar sir.
Okay.
There is, I would just for your clarity, I will just add in that, see, our discussion with all these people, because they have reached out to us, I would say that we have negotiated for a lot of things. There are a lot of safety nets that we have built in for these businesses. There are a lot of minimum guarantees also we are expecting, so that because a company like us, when it gets into asset kind of heavy models, we will never get into something which can just fall flat or anyway. So we are getting those assurances also from these companies, and that's how we'll be building it. I think if we get in a little bit more time, and by the time we get in discussion next time, I think I'll have a bit more specific numbers for you. Yeah. But mota 7 to 8% margin is what we are looking at for you, just to answer your question.
Okay. And on the revenue side, because I believe the revenues will be quite different. It's a bus, so there'll
Yes,
be.
the top line obviously. So one of the major part, things for this is that these both businesses bring in a very solid top line, right? We are talking about, if we are talking somewhere close to 7 to 8 lakh kind of a monthly kind of a billing that happens for a 300 350 400 kilometer kind of a trip intercity bus. So based on that, if you look at it, just the multiplying effect just comes in, and this becomes a very easily becomes a 100 crore kind of a top line number with a very limited buses. So yeah.
Got it. But the buses will be on our books. We'll be buying the bus.
Absolutely, yes.
Yeah.
This is going to be so it's going to be a strategically a mixed effort. What Shikharji we want to do, right?
Right.
See, we understand asset light business, and in ETS and other business also, how we are strategically now looking here is that there are a lot of opportunities where sometimes you might have to have few of these assets on your kind of books to have all the everything checked box, and people to have that kind of we come in their eyes as a person who's there doing this business. And after that, there is obviously an opportunity to make this also as an asset light business also. But based on, like I said, both of these models are at a pilot kind of a stage, and we can easily take a call on asset light or asset heavy depending on what the numbers are going to be. So even we have both these options with Flix also. How do we want to go about it?
So Shikhar sir, one of our selection criteria for both these large international companies was our ability to run an asset light model.
Right.
Okay, but the proof of concept will be in we starting for our learning and for our financials. So we have already negotiated that after some time we will go on to an asset light model.
Yeah.
Got
Because
it.
again in four-wheeler and everything, as you know, the asset light business is something very prevalent. Individuals can get into these things. But buses, obviously, this is a challenge that not any Tom, Dick, and Harry can today buy a bus, right? So at that time,
Right.
we want to look at it as a asset light kind of a model. Obviously, we will need to have a very strategic investors coming in. Might be someone like you or anybody else who comes in the picture and pitches in. And that is what the kind of asset light is going to look like in that side of the market, which you already know. Just wanted to share that.
Got it. So one thing, once numbers are more clearer from your end also, I would like
Yes.
to understand like what are we expecting the incremental ROCs, because buses, let's say one bus, what will be the investment on a bus, and similarly what kind of EBITDA it will be generating, and what kind of
Sure.
maintenance and all. So
Sure.
would like that clarity when you once will be
Absolutely.
there.
We will be having all these numbers very specifically
Yeah.
because as I said, this is not something like a business that I am starting from a scratch. Obviously, I'm working at this model with a very large player who has proved it across the globe, and they've entered in the market. So when they also discuss with us, it is a per kilometer, per kind of a discussion that we are also doing in. As soon as we have more clarity coming in, Shikhar sir, you'll be the first person to have that. Yeah.
Perfect. Thank
Okay.
you. And now just coming to your traditional business. So, are we investing in our own vehicles in that traditional business as well? Because I see a lot of this year cash flow from investing has gone in buying new vehicles
Yeah, I
around.
think Archie would be, giving a direction on that.
So yes, Shikhar sir, obviously strategically there will be a small percentage will be coming in our own asset. Only like I said in the previous discussion also, but there are a lot of corporates today who have coming in with some kind of a compliances that some 5 to 7% or up to 10%. The fleet owner should have the skin in the game. There are two things which corporates are trying to solve with this thing. One is having vehicles in backup. Sometimes when the entire model is a asset light model, what happens is that sometimes when you would like the monsoon comes in and this kind of thing comes in, no, so completely the entire the gambit goes in for a toss, and there are literally no vehicles in the market. And what these fleet owners like us also come in and say that, see, there is a limitation because we don't own vehicles in our lot, right?
Right.
So there is a lot of change in discussions also happening. If you will see few of the RFPs who have come recently, you can't even be eligible to be part of that RFP if you don't have like 5% of asset in the picture, right?
Good.
So yes, we will be having, but this will be very strategic, Shikharji. The number will be less because we do understand the problems of asset heavy businesses in the employee transportation and the limitation. So it will be very strategic and very limited, right? Yeah, but it will be there to answer your question.
Got it. Got it. And one last question, like why are we looking to acquire other small companies in this traditional business? Why not just wait for their contracts to get over
Yeah,
and bid for those contracts? Because
yeah.
over here, I mean, what value any companies have is their contracts basically with their clients. So
Shikhar sir, I'll be very honest, Shikhar sir. I'll tell
yeah,
you what
yeah,
my viewpoint here is. I've spent a decent amount of time in the employee transportation business also. See,
right,
Shikhar sir, if you look at just the example of OSFM itself, like we've been
right,
there in this market for almost 22 years. There are many of the clients that we have been working for last 10 to 12 years. Trust me, it is almost impossible to remove me from a client who is there. Tomorrow, if somebody just goes in there and says that, I'm going to reduce the price by or a 10% or a 15% just to enter the market, or it becomes very difficult, right?
okay,
And
okay,
then the second part is that every region in India today comes with their own expertise, right? A market like a Mumbai is completely different from a Bangalore or a Hyderabad or a New Delhi. And the kind
right,
of expertise you need at a ground level to become to that level, what OSFM is in Mumbai or a Pune market, is not something that we can simply just solve it with even a large set of investment as well, right?
hmm, hmm,
So what we are looking at, and at the same time, we also see that there are a lot of people who do not have that kind of a appetite or the capacity to run these operations. They have entered a lot of players, like there are 10 to 15-year-old companies who are there in the market. They have entered into a lot of companies. They are still having contracts of 4 to 5 years because these contracts are very long, right? Long term.
right,
So
right.
changing them, entering becomes very difficult. So this is right now a very kind of a thing that if we are searching, if we get a player who has a significant kind of good set of clients that we were also targeting to enter, and for some reason we are not able to go in, the kind of locations that we are not able to penetrate at the comes both at a supply level and at a demand level, and people who are also doing a sustainable business, also having a little bit of a product and kind of kind of sustainability as well. That is when we will be going into these kind of partnerships. So we have identified few people so that these numbers can only add to the journey rather than we don't have to create the entire the funnel again. That is what our approach is today.
Got it, got it, got it. Yeah, thanks a lot for answering my questions.
So
I'll
Shikara,
yeah,
growth path is a 360-degree path. We are not
right.
letting anything off the table.
Got it.
But we will always consider all the pros and cons, and we will update our stakeholders even before we take any of these mega decisions.
Got it. Got it. Got it. Perfect. Perfect. Thank you. Thank you.
Thank you.
I'll,
Thank you,
Thank
Shikara.
you, Shekhar sir.
Next question is from Mr. Rahul Mitlani. Mr. Rahul, please go ahead and ask the question.
Hi, Shanbag sir. Hi, Patil sir.
Hey,
Uh,
Hi.
hi.
and hello, Suraj. Good to hear
Hi.
your thoughts on the expansion. I have a few concerns which I'd like to raise. You're coming from the startup background. I'm talking to Suraj here.
Yeah.
Uh, you've seen the debacles of Dunzo. I'm being blunt over here.
Yeah.
Blue Smart recently. Why is the company heading in that direction? Because I mean, those businesses have failed, right? They were startups, glamorous, but what's the end result? uh, they didn't do well.
So
Even Ola, for that
yeah.
matter, right?
Yeah.
So why are we changing our path? Because what's worked for OSFM has been the ethos of being conservative. Why the sudden change towards that? That's my first question. And then obviously I'll ask the following one. Once
Yeah.
you're back.
Rahul, so let me tell you about the Dunzo part. Obviously, I was there when Dunzo was the talk of the town. I'm talking about somewhere like 2017 to 2020 when they were literally the pioneers of basically making the first company who made India, I would say, lazy by the grocery deliveries and all. Then they were doing a marketplace kind of a model. That's where I was working with them. But again, if you look at it, Rahul, I would not call it like, see, it's at an absolute level. I would say 1 week before people were talking about Blue Smart still being the best service in the market, and then whatever the nitty-gritties happened to it, the company today is not in that shape. But nobody can deny the fact that Blue Smart or Dunzo were the pioneers of giving some quality service, and they created that brand in the market, and they solved a problem, and they led the way For many other companies today, for example, Uber wanted to acquire a Blue Smart, and Uber was not able to get a thank you from a single customer at an experience level when a Blue Smart today came in and did that with electric vehicles, not even talking about and keeping in all the infrastructural problems and everything, right? It is very simple today to say that, one company failed for doing something different and, being aggressive on that way. Because Blue Smart, I don't even consider the problem was problem was about there were a lot of nitty-gritties around it. It was not just about the operations, right? They obviously had solved a particular problem. Same thing goes for Dunzo as well. The companies today fail not just for because they were not able to generate money or they did not understand the profitability part. There are a lot of things behind. These companies have worked. Dunzo was there doing this almost 10 years. Had Google coming in India, and investing. First time Google invested in a platform where they had all the number of options in the market. Alphabet literally came in and directly invested in Dunzo for that team. They did it for 10 years. At the end, even Reliance came in the picture and put 200 million into these businesses. So we cannot say these are failures in that way. Now, answering to your question that what is OS?
No, but they have failed, right? Because I mean, they're no more, right? They have failed. I mean, you can't deny that.
No, absolutely. There are hundreds of companies in employee transportation who are not there, Rahul.
No, that's what I'm saying, right?
Yeah.
See, that's the thing. That's what my
Yeah,
point
there are
is.
hundreds of
That
conservative
my point
companies.
is that
Yeah.
OSFM's strength is that, right? So why are we deviating away from it?
No, we
Why
are not. We are not, Rahul.
build on the strength?
Yeah, one sec. See, our directions to him is sustainable. Hello, Rahul.
Yeah, I can hear you. I can hear you.
Yeah, see, you have been knowing us, and I understand that you identify us as a conservative company. What we need, what we are bringing in to the table with the strong backup of a sustainable understanding the business. And trust me, Rahul, if we miss the bus today, we'll not be able to catch it. And we have been identified because of these special skills that we have developed over 22 years of being a sustainable, continuous, operational skills that we have developed over 22 years. Okay.
Right.
So what we have been doing, let's say, a traditional way of doing businesses. Suraj and his team and our team are going to bring in that need. It's a need of the hour, right? Okay. B2C business is there to stay. You and I are going to be users of it for a long time. So if we do not participate in that, we'll be left out. Is what, though Suraj comes with that background, the last couple of months, he's understood the importance of a long-term sustainability. He was shocked that a company sustained for 22 years. He said, Suraj ka time and again, ki, sir, I would like to learn and bring that sustainability, and he keeps giving examples of his experiences of Google and other companies which have sustained for so long, making a profit. Cash burn is anybody's business, yeah. Cash burn to ho jata hai. Our mandate to Suraj and the succession team is profit and growth, both together, not at the cost of, one at the cost of the other.
And we have taken calculated risk. It is not that,
Yeah.
we know what we are doing exactly and how much we are going to risk. And if there is a fall, there is a reverse also, how do we deploy that vehicles in other sectors?
Yeah.
Right. Now, just a quick question, sir, on this part only. Like, how much are we looking to deploy, like on the cash side of things? Like, have you all put a number to it?
Honestly, the numbers that are expected of us are very large, but I don't
So
want.
would that mean you would have to do another fundraise from the market?
Thanks to you, yeah, we have enough money.
I mean, how much do we have? 37 crore on the cash at the moment.
That I would like. I don't. I mean, I don't.
I think our CFO sir can confirm that. Yeah.
On a personal level, I don't carry a wallet, so
No,
I
on the company
that
balance
money.
sheet. Right.
We are sitting on 51 crores currently.
Okay.
Yeah.
And honestly, Rahul, we are negotiating very hard deals and bargains. Let me tell you, I think we'll be able to run this operation. See, it could be a slightly asset heavy, but it is going to be absolutely low working capital.
Okay. And so what would be our blended margins? Have you all done any sort of like rough, like, because I believe our margins will go down, right? So overall on
No,
the
margins, in fact, the
consolidated
margins will
level.
not go down. Cumulative margins will be higher. We are about 6 to 7% on these in the first year. So first year itself, 6 to 7%, and the cumulative margin will be much higher.
So I'm saying because you'll have to acquire new vehicles and all that depreciation kicks in. So that way.
No, we have other options also open to us.
Okay.
Yeah.
And sir, one last question from me. Shanbag sir, the acquisition part, like, is there anything happening in there? Like, from the employee transportation side of things, like you're looking at, I believe the last time we spoke,
See,
there was something happening.
we have, we have identified quite a few companies on a pan-India level as well as a regional level. And now we are focused down to regional because that is where we would like to do it. But as I said, our approach has been sustainable. That acquisition has to be sustainable with us and follow our growth path.
Got it.
So RC Saab and his team has identified a few companies. They are already in negotiations with them. And I think we should be able to either close it or let go of those companies in the next 2-3 months' time.
Sure. And just before I close, we've seen that we serve MNCs, right? So has there been any sort of tariff impact because they've sort of reduced hiring? Have you seen anything like that from the client side? Where
No,
they've sort of talked of
in fact,
reducing
it is
budgets?
working out to a benefit because we are, from the consolidation part of it, it is the smaller vendors who are sub 50, 20 crore, 30 crore vendors are going out of the system.
Great.
And that is being accumulated and, passed on to larger vendors. And that is where, because of the large size of the contracts, this percentage, which Suraj mentioned about 5%, 10% vehicle buy, because in the asset light, the client feels that there is no skin in the game. So that's where these things are coming in of 5 to 10% vehicle ownership.
All right. Thank you so much, sir. I'll get back in touch.
Thank you. Thank you.
Thanks, Raul.
Next question is from Mr. Keshav. I also request participants to limit their questions to two each as we have time restrictions. Thank you.
Keshav sir, good afternoon.
Thank you. Thank you so much for giving me an opportunity. So, happy afternoon, sir. Happy afternoon. So, I was just comparing your numbers with Ecos Mobility. So, Ecos Mobility market cap is 1706 crores. Our market cap is 170 crores. For the FY 24-25, Ecos Mobility reported revenue of 663 crores. We have reported revenues of 140 crores. And Ecos Mobility has the same 14, in fact, 13.87% EBITDA margin. Ecos Mobility has reported EBITDA of 92 crores. We have reported an EBITDA margin of 14%, 14.28% higher than Ecos Mobility. Our EBITDA is 20 crores. Now there's a higher charge of depreciation which we've had in this year. So this is year two, if I'm not mistaken, of depreciation. So will the depreciation be lower in the third year going forward? Can you give us some color on what depreciation will have in the next year? And when you're talking about heavy, we are right now added 10 crores worth of vehicles in the current year. So are you going to buy any bus for the Flixbus mode of operation?
I think we lost him.
केशव साहब आप सुन रहे हो केशव साहब
I guess I lost him. So next question is from
Answer.
others can
Hello. Hello.
hello
Hello. Yeah, am I audible?
yes.
Yeah, I just have one question regarding our capital structure. So, if I look at the debt part, most of the facilities that you use currently, you use overdraft and term loan facilities. So that's what I gathered from the credit rating report. So, just my question is, considering that your counterparties, at least till now in the ETS segment, are these large prime corporates. So have you explored other forms of financing like invoice discounting or factoring, considering that working capital is your chief chief requirement in this segment, because if that could allow you to probably save a few percentage points on your debt cost. So just wanted to hear your thoughts about it.
Sir, actually, we have a OD facility at this moment, and those OD facility against our FD. So we don't have any loan actually. If you say, then if you have a credit limit, like if you have a CC, then it will be a loan. We will consider it as a loan. But we are using the existing fund for our working capital. So we don't have any loan at this moment.
Okay, got it. So, and in terms of your like growth capital financing going forward, what would be the sort of debt mix that you would be looking at, or what would be the kind of debt equity ratio that you would be comfortable at?
Honestly, sir, at this moment we have to utilize 50 CR in this year. So if our monthly revenue, till the time our monthly revenue touched 25 or 30 CR, to that extent we don't require any additional fund.
That means up to about 300 CR, we are
We don't have-
self-sufficient in working capital requirement and growth fund requirement.
Got it.
Yes. Yeah, but then we
that's
are exploring multiple. We are just parking
Okay.
all those. We are understanding all the modes of financing available to us, and we are
Yes.
parking that, right? And as during the conversation, we said that, depending on how we grow, how aggressively grow, we will be tapping all the necessary funding mechanisms that are available to us.
अच्छा, केशव साहब ने एक डेप्रिसिएशन के बारे में सवाल किया था।
अरे केशव साहब, are you there?
तो हम आंसर देके रखेंगे। आंसर दे
आ गए केशव साहब?
Okay.
He has rejoined. Once Shree sir is done with his questions, I'll
No,
again.
I'm done.
Yeah, Keshav sahab, can we go back? Vajay sahab,
Yes, I'm there in the call. I'm there in the call.
हाँ, ठीक है केशव साहब,
ठीक है.
Keshav sir, as per the companies we have to follow. We are following the written down value method, and it is 39.30% on commercial vehicle. That we have to follow. We are not allowed to reduce that percentage. And again,
No, I'm saying, will it be lower next year? Because this will be the third year.
definitely in the existing vehicle, it will definitely be on lower side, because from 100, if you deduct 40%,
Yeah, from the
then it is-
IDV perspective, it will be reduced accordingly.
if we let's say one vehicle cost is 10 lakhs, and this year we have already taken the depreciation amount of approximately 4 lakhs amount, like 39.30%. Just if you round it up, that is 4 lakhs. The 10 lakhs minus 4 lakh, that is 6 lakh. And if we consider 6 lakh, 40% of that 6 lakh, it is only 2,40,000 depreciation in this year. That means we are our depreciation percentage will be 24% on basic value or in the car value.
So basically, for the next year, we can find a 50% jump in PAT because your depreciation would be much lower for next year.
Yes,
Is that a
yes,
safe
because-
assumption to make?
So you start congratulating us right now. Thank you.
No, sir, I'm asking you, what do you think? Is my calculation correct that the depreciation will be much lower for next year?
आपका कैलकुलेशन करेक्ट है, लेकिन हम इस साल वापस से जो गाड़ी ले लेंगे उसमें उसमें डेप्रिसिएशन ऐड होगा। नहीं तो अगर आपके हिसाब से डेफिनेटली 527 का वो कम होके कम से कम 1.5 करोड़ का एडिशनल पैट में ऐड होना चाहिए अगर हम लोग गाड़ी नहीं लेते तो।
Got it. Now, sir, we are at 170 crore market cap versus Ecos Mobility, which is at 1700 crore market cap. They are 10 times our market cap. And in terms of sales, in revenue, we are at 140 crores versus 660 crores. So you have 21% of revenue of Ecos Mobility. So if we are looking to scale up our business, can you give us some revenue projection for 25, 26 and 26, 27? How much we can scale up without, and we will be compromising EBITDA margin because currently we are at 14% EBITDA margin. So are we aiming to increase the sales without compromising EBITDA margin? And what kind of sales are we looking at for 25, 26 and 26, 27? Can you give us some color on revenues?
Definitely, Keshav साहब, 25, 26 very conservative, 175 ये टॉप लाइन होगा। और आप जैसे आप बोल रहे हैं EBIT का परसेंटेज, हालांकि मैं तो बोलूंगा कि बढ़ के आएगा। एग्जिस्टिंग 14.66 है तो उसमें भी इंक्रीज हो जाएगा।
ओके And what can we look at for 26, 27? With the right now we are on Uber, we are on a pilot mode. We are just exploring the Flixbus partnership, which is a marquee German bus operator. So I am assuming that this year we'll be doing all of that. So 26, 27 would be the year where would be going all out. So can we look at a much more aggressive revenue growth for 26, 27 versus a 25, 26? Or would you like to stick at 30% only?
No, it will be aggressive, Keshav.
Okay. Okay.
Yeah, I think we would let Suraj take over this.
No, so Keshav, like we said, for this year we have given a very conservative in the number because, like you also know, these are all pilots that are going to happen. So we will test the waters, and we are pretty sure that we are going to be aggressive here. So 26, 27 is going to be a full-fledged concentration on the Uber business and the Flix business. And like you said, we are looking at, but I won't want to give an exact figure right now. I think by the H2 and everything, we'll have more clarity on what the 26, 27 numbers can be. But yes, you can consider it to be aggressive.
Okay, I just have a small suggestion from my side. We are at 10% of the market cap of ECOS. ECOS is in main board and they're giving quarterly numbers. So if we can, because we are having GST, we get all the numbers by the end of the month. What we have done in terms of sales and numbers. So if we can consider switching to a quarterly mode of, con calls and numbers, it will definitely do a lot in terms of invest shareholder perception, and we get a 3-month outlook on what the company's done in 3 months. It will help us in terms of enhancing market cap of the company. Just a suggestion from my side, sir.
Sure.
Yeah,
Keshav,
just taken up.
We'll just work on that, Keshav sir. We'll just discuss that, and we'll see what the best can be done, right?
Okay, thank you so much. Thank you so much, sir. That's all from my end. Thank you so much.
Thank you.
Thank you.
Next question is from Mr. Vaibhav Jain. Vaibhav sir, please go ahead and ask the question.
Good evening, Vaibhav.
Hi, sir. I hope I'm audible.
Hi, Vaibhavji.
Yeah, so my question, I think we're all asking questions on similar lines. I think all of us are mainly concerned about shifting to an asset-heavy model and what sort of an effect that could have on the balance sheet as well, whether there's further dilution or whether there's more debt to be added. My question is specifically, what sort of capital outlay are we looking at for FY26, and how many, in terms of units, what sort of number are we talking for fleet, and the part of the capital outlay that's going towards the fleet?
See, one thing, Vaibhavji, to everyone who is concerned on the asset being, all these costs and everything, costs coming in the picture, we would want to be very clear. See, how the debt entirely is going to work in, these are all businesses which are pretty much running in the market. There are, minimum guarantees coming in the picture, and operational money in these businesses, the working capital is almost negligible. It's like the payments coming in like few days of time, and also the kind of, like we said, we are only looking at getting into the markets which are sustainable in the kind of model and the kind of lineage that we come in for, right? Just from our side, to give you a specific number on what that exact number is going to be, we would need some more time for that. But these are not open risks where these buses are entirely, or the cars we are talking about come entirely on our books and everything, and then it is all about, do we run a good business or not? It is not that simple. These are all coming with a set of business commitments. These are all running models right now. This is not like something exclusively new in the market. So we have those guarantees from the players as well, and that's the kind of secure market that we're talking about.
Vaibhav sir, I understand you and all our stakeholders' concerns that for 22 years we've been an asset-light company.
Right.
One of the major reasons of the delay is that we were firm on the negotiations with these companies that this is our DNA. Okay, we will continue to use this asset-heavy fleet, company-owned fleet, only on a need-based model.
Right.
Okay, and that is exactly where now our pipeline is exclusively ready for us to convert these two giants into an asset-light model mindset. Took us a little time.
Okay.
So that is the growth path. That is exactly where the growth path. I understand, because it is not only your concern, it is our concern too. I run a 3,000 vehicle fleet with less than 200 vehicles on my books. That's the
Right.
kind of ability that I bring. That is the kind of ability that we have developed over 22 years. But the general thing is like, the skin in the game. And we have successfully been able to commit and convince them that this is the model that we will run. Now we already have back-end partnerships ready with us. People are queuing up to join us in both these businesses. But the control factors were the key factors. Those to maintain those control factors, I'll give you an example. Okay, every city requires a fire brigade station, but doesn't mean that it gets used every day. But that having that fire brigade creates a sense of security among the people of that city that, okay, fine, in case of a problem, there is something or the other. It's exactly the same model that we have promoted and convinced them. So don't worry, we will not take unnecessary risk in terms of being asset heavy. But yes, to a certain extent, we are probably looking at replicating the same model. Now that you asked a question, it took us 20 years to reach 3,000. We are going to be probably reaching that numbers in the next 2 years.
And also to answer Vaibhav sir, for you and for all the investors here, for example, time is of essence. Why am I saying that? There is a large player who is there in the Indian market today. We all know, we all use, the people who are on this call are today using as intercity buses. There is a clear logic, infrastructural development is happening. We are every day sharing images of ministers talking about the roads and everything. This is something which is going to be the next big thing tomorrow. The distances of 600, 700 kilometers are now becoming something worth. People are just going to drive tomorrow. There are electric buses coming in the picture. This is where the governments are also going in. But every day you will not have an opportunity where a giant is coming in the Indian market. There are people reaching out to them and get this partner. They are already 1.5 years, they're already running 250 successful buses in different markets today, right? All the routes and everything was already fulfilling, right? They were all running. There was no problem, but still there was another 250 buses from Flixers already come in a year's time. This number they are aiming at going up to almost 1,000 and above in another 2 years of time. It's all about how do we basically come in the picture. See, making it an asset heavy business or asset light business, all these things is strategic decisions and can be done at our level, the kind of expertise we have. See, asset heavy and asset light is not very far from each other. It's all a strategic decision. How do we basically work on our debts? How do we get the investors coming in picture? This can be strategic decisions. But the question is, today there is an opportunity, and as a company which is we are answerable to the shareholders, are we looking at growing and returning much better for whatever you guys have invested? That's a very simple question. It cannot just happen with one domain of business which will have some kind of a top line. There is going to be so there has to be diversification in this business. There has to be safe diversification, and that is what we are going to very confidently build in. And we are very much sure that the kind of people who are behind this are people who know the insecurities, who know what the negatives of these models can be. But we also understand what is the upside to this is and how this can become a game changer. So that is what we are proposing in this meeting, right? Yeah.
Vaibhav sir,
Vaibhav sir, any other questions?
yeah, do you have more questions?
Yeah, sorry.
Your voice is breaking.
Growth opportunity. I'm very happy that we're going in. So, am I audible?
Yes. No.
Yeah, I just wanted to say, given the tremendous growth opportunity, I'm happy that we're taking such an aggressive. I'll just type. Thank you.
Yeah. Okay. Thanks, Vaibhav.
Next question is from Mr. Vinayak.
Yeah, Vinayak Kudwa here. This question is specifically to RC Patil as well as for CFO. What I understood with, clarify me if I'm right, what I understood with one question which was replied on depreciation. As and where basis, if we don't add any vehicle in current financial year, does that mean 5 crore 25 lakhs odd depreciation would come down to 2.5 crores in March 26?
Near about 3.2 crore.
ठीक है. So I Okay, so this got
नहीं,
answered.
करेक्ट है, नियर अबाउट 2 करोड़।
ठीक है, तो सेकंड क्वेश्चन है पाटिल साहब, करंट ईयर में आप ही ने कहा है कि 175 करोड़ मिनिमम रेवेन्यू होगा, 14% ऑड एबिटा होगा, तो फेयरली हम सोच रहे हैं कि एक 27 करोड़ का हमारा एबिटा जनरेट हो सकता है। अगर 27 करोड़ का हमारा एबिटा जनरेट होगा तो करंट ईयर का ऐसे ही टेंटेटिवली जो भी हम बिजनेस के लिए बात कर रहे हैं, तो दैट मीन्स कंपनी अगर चाहे 20-22 करोड़ का गाड़ी अपने एबिटा के अंदर ही ले सकता है, करेक्ट?
करेक्ट।
इसका मतलब ऐसा है कि कंपनी का जो आज 51 करोड़ का कैश है, दिस कैन ओनली गो अप, करेक्ट ना?
करेक्ट।
ठीक है, सो और एक क्वेश्चन है कि आज टिल डेट हम एम्प्लॉय ट्रांसपोर्टेशन बसेस में भी कर रहे हैं, करेक्ट?
हाँ,
तो
करेक्ट।
हमारे पास कुल मिला के कितने बसेस होंगे एसेट हेवी में एज वेल एज एसेट लाइट में एज ऑन डेट?
एसेट हेवी में सिर्फ 4 बस है और 111 बसेस एसेट लाइट में है।
Wonderful. So that means we have a lovely experience of handling bus business for employee transportation also. Correct now?
और विनायक सर, मैं ऐड करूंगा, जैसे लास्ट ईयर में हम लोग ने 71 गाड़ी ली थी और ऑलमोस्ट 9 करोड़ का हमारा ये था, तो इस साल का भी हम लोग एक 10 से 12 करोड़ में ही ये जो हम लोग ने तीनों जो फ्लिक्स एंड उबर और हम लोग जो ईटीएस का कर रहे हैं उसके इसमें ये 12 करोड़ तक हम लोग हो जाएगा।
करेक्ट। तो दिस इज लवली वे ऑफ हैंडलिंग थिंग्स। तो इसका मतलब ऐसा है कि अवर कैश पुल विल ओनली गो अप, क्योंकि भाई अगर हम 20 करोड़ का एबिटा पिछले साल फ्री कैश जनरेट कर पाए, तो 27 करोड़ के एबिटा में मच हायर फ्री कैश हम ये साल भी जनरेट कर पाएंगे।
यस, एब्सोल्युटली।
ठीक है सर, एक एक सी दिस रिक्वेस्ट इज देयर फ्रॉम एवरीवन, सो आई स्ट्रांगली पुट दिस रिक्वेस्ट कि कंपनी मंथली टीडीएस हैंडल करती है, मंथली जीएसटी हैंडल करती है, क्वार्टरली जीएसटी और टीडीएस का रिटर्न फाइल करती है। तो जैसे ओएसएफएम पहली कंपनी बनी टू डू एन आईपीओ, ठीक है, आज तक इतिहास में किसी ने आपसे पहले एम्प्लॉय ट्रांसपोर्टेशन कंपनी में किसी ने एसेट लाइट में आईपीओ नहीं करा, तो यू आर दी फर्स्ट पीपल। एंड पोस्ट आईपीओ आपका परफॉर्मेंस अब तक सबसे बेहतर रहा है, क्योंकि इकॉस का शेयर प्राइस आईपीओ के नीचे है, डब्ल्यूटीआई का शेयर प्राइस आईपीओ के नीचे है, और आज भी आप मोटा मोटा 50-60% आईपीओ के ऊपर है। तो आपने हमेशा नए 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 माइलस्टोन सेट करे हैं, आईपीओ से लेकर पोस्ट आईपीओ फंड रेज भी आप ही ने करा है, पोस्ट आईपीओ किसी और ने फंड रेज नहीं करा है। तो हम चाहते हैं कि ये कंपनी क्वार्टरली रिजल्ट दे, क्वार्टरली रिजल्ट देने में कोई प्रॉब्लम नहीं आना चाहिए, क्योंकि आपने हर टाइम नए नए चीज सेट करे। आपके पहले किसी ने आईपीओ नहीं करा, आपके पहले किसी ने पोस्ट आईपीओ फंड रेज नहीं करा, तो आप क्यों ना लीड लेते हो कि भाई जून क्वार्टरली रिजल्ट दे दे? एनी एक्सप्लेनेशन विच यू ट्राई टू गिव, that will be seen as you are trying to hide behind the rule book of SEBI. Perfectly fine, it is up to you. We strongly feel कि boss you should be the first company to give quarterly result.
विनायक साहब, डेफिनेटली हम लोग ट्राई करेंगे, लेकिन मैं आपको गारंटी नहीं दूंगा, लेकिन हाफ ईयरली के बाद हम डेफिनेटली आपको ट्राई करेंगे क्वार्टरली देने का।
Yeah, thank you. All the best.
थैंक यू सर, थैंक यू, थैंक यू।
Thank you, Vinayak sir. We have few questions in chat box from Mr. Shikhar. How many vehicles do we already own and how many vehicles will be adding more for employee transportation from B2B?
Presently, we are at around 200 vehicles. I think we should be able to, as I said, our ratio is always 10%. Even now, even it's less than 5%, but we will probably look at being a 10%, and our fleet size would be around 4,000. So you can just factor that in. I think maybe another 150 addition for the employee transportation.
Okay. Next question is from Mr. Raghav.
Shikhar sir, it is exclusively for this employee transportation, right?
No, it's on the chat box. I think the person is not there. Okay. It's an old question. We should have.
मैडम कंटिन्यू करिए।
Okay, so next question is from Raghav. Sir, what is the growth outlook for current B2B business? Will we be focusing on increasing top line by leveraging our client relationships?
So obviously we have mentioned what is the kind of top line we are looking for 25, 26, which is 175. So this is going to be coming in from a mix of the current business, what the the kind of more vehicles we are going to deploy in the current business, and also having the new discussions which we are closing in. So yeah.
Okay, so we have question from Keshav again. Mr. Keshav, you can go ahead and continue.
Yeah, sir. So from the earlier conversation with Vinayak Kudwa, sir, I could get that we are going to do from current.
Your voice is breaking, Keshav sir.
केशव साहब आपका
Keshav sir, your internet, there is some problem.
Yeah,
You need to-
invest on a good Wi-Fi.
Yes.
20 crores are EBITDA. Okay. Yes, yes. Is it better now?
Yes, sir.
Yeah. So what I got from the earlier discussion with Vinayak Kudwa, that we are looking at a 27 crore EBITDA for current year.
Yes. 26
So
plus.
26 crores EBITDA for current year. And we are also looking at 12 crores coming in from Uber and Flixbus, though it is very early to say because we are right now running a pilot. So can we make an assumption of 26 plus 12? That is a 38 crores EBITDA, or overall we are looking at 26 crores? Or there is a possibility of 38 crores happening because of the new association with Uber and Flixbus.
We are sticking to 26, sir.
नहीं केशव साहब देखो कुछ गलत हो रहा है हम लोग ने जो प्रोजेक्शन किया है 175 का जो ट्रेंड जो चल रहा है उसके हिसाब से 26 प्लस करोड़ का हम लोग ईबिटा करेंगे अभी जब आप उबर और फ्लिक्स का बोल रहे हो वो तो अभी पायलट रन है तो उसका एग्जैक्ट फिगर हम लोग हाफ ईयरली के बाद दे सकते हैं आपको
12 CR is revenue component. That is not the EBITDA.
Got it. I got it. Thank you so much. That's all from my side. That's all. Thank you.
See, Keshav sir, for a clarity for all the stakeholders, 12 crores is the revenue generated from the pilot projects. Now the
Okay, got it.
multiplier, as I said, we have been selected for the larger play. We are doing a pilot project for our comfort, not the clients. For the
Got it. I got
kind of
it.
expectations that they have from us is sky high. But being a conservative, being a company which has always looked at all the financials, this is what our projections right now in the pilot project is.
Got it. Okay. Thank you, sir.
Thank you Keshav sir.
Thank you, Keshav sir. Shikhar sir, do you have more questions?
I think Shikhar sir is not there. I think he's just.
Yeah. I think these questions are old questions. These have been answered. They've asked us, but if there is something specific.
Investors, if you have any more questions, you can raise your hands or you can also drop your questions in the Q&A section. Thank you.
Okay, we have another 5 minutes more.
Yes, sir. There is one question in Q&A section. What area of the city will pilot be in?
We are into people transportation. It will be across the city.
This will be all metro cities, the pilot will be.
Buses, as far as the interstate buses are concerned, we are going to be sitting down with them to identify the routes. Technically, we have been handed over the entire western region, that is western part of the country is been handed over to us. But depending on our capability, our appetite, we are preferring those locations, those interstate locations where we have our on-ground teams to monitor at both the ends. So I think in the next 1 week or 10 days, we should be able to communicate to the market as to where overall it is western region. Within that western region, which route? Western region would mean Mumbai, Gujarat, Goa, whole of Maharashtra is what the western region definition for them is right now. And the extension would be up to Rajasthan and Delhi.
Okay. Next question is from Aditi Roy. What portion of revenue growth in financial year 25 was volume driven versus price driven?
Sorry?
What portion of revenue growth in financial year 25 was volume driven versus the pricing driven?
Yeah, it is, you can say 90% on volume driven.
Yeah, 90% was volume driven and 10% was price.
Okay.
And that is why, see, our conservative approach, we could have gone very aggressive on that, but that would have, that would have hit our PAT and our focus on profitability. We could have taken a big hit. I don't want to name my competitors, but then that is exactly the model that they adopted and it reflected. As some of our investors have been monitoring those companies, I've already noticed.
Okay. So I guess we have answered all of the questions from the chat box.
In case of any other questions, they can reach out to our email ID. We will be very happy to answer.
Yes, sir. I think we can conclude for today. So thank you everyone for joining the call of Shree OSFM E-Mobility Limited. If you have any queries, you can write us at research@kirinadvisors.com. Once again, thank you everyone for joining the call.
Thank you.
Thank you.
Have a good day.